Hey, everyone, and welcome back for another deep dive with us. Today we're going to be looking at the world of global finance, and especially this idea of a monetary reset,
Yeah.
which can feel pretty intimidating, right? Like all this talk about the dollar and gold and, these cryptic
It can
CBDCs.
definitely feel a bit overwhelming.
Yeah.
Yeah.
Ugh.
But that's why we're here to try to break it down for everyone.
Exactly. Our listener wants to know basically what's happening with the future of money. Like, could we really be moving away from the dollar as the world's reserve currency? Is gold really making a comeback? What even are CBDCs?
Right.
We've got a fascinating source to help us unpack all of this.
Yeah, we're diving into The Great Monetary Reset, a 2025 post by Navroop Singh and Himja Parekh.
Okay.
And they give us some really interesting historical context and some bold predictions about where things might be headed.
Yeah, so let's rewind a bit, right? I mean, everyone remembers when Nixon took the U.S. off the gold standard back in the 70s.
Yep.
I mean, that was a massive turning point, and our source argues that it set the stage for a lot of these financial ups and downs that we're seeing today.
Yeah.
But to understand where we're going, we actually need to go even further back in history.
Yeah, back to 1944 to a place called Bretton Woods.
Okay.
That's where the world basically decided to make the US dollar the dominant global currency backed by gold.
Wow.
It was a huge power shift, almost like a financial earthquake.
Hmm.
Before that, the British pound had been the top dog for centuries.
A world ruled by the pound, huh? So this Bretton Woods Agreement essentially handed the keys to the kingdom to the U.S. dollar?
Exactly. And it wasn't just about the dollar itself. It was also ushering in a new world order, sometimes called Pax Americana, backed by institutions like the World Bank and the IMF.
Yep.
And these institutions, as Navroop Singh wrote in his 2022 book, The Great Reset, have consistently promoted American economic and political interests on a global scale. So it's kind of like setting the rules of the game and then also being the referee.
So the dollar was king, and everyone was playing by America's rules.
Right?
But then, as you mentioned, Nixon comes along in 71 and says we're off the gold standard.
Exactly.
What happened then?
Well, taking the dollar off gold gave the Federal Reserve a lot more freedom.
Okay.
They could print more money without needing to have the gold reserves to back it up.
So more freedom sounds good, right? More flexibility.
Sure, but just like most things, there are trade-offs.
Right.
This move helped fuel inflation, as more dollars in circulation can lead to higher prices.
Makes sense.
But it also spawned something called the Euro-dollar system.
Eurodollars, what's that about?
Think of it like a shadow banking system operating outside of U.S. jurisdiction.
Okay.
Basically, dollars held in banks outside the U.S. became a sort of parallel currency market.
So kind of like the Wild West of finance, beyond the control of the Fed.
Exactly. And this matters to you because the Eurodollar system is massive and can make global financial crises harder to predict and manage.
Gotcha. So I'm starting to see how all these pieces fit together.
Yeah,
We've got the dollar becoming king, then going off the gold standard,
right.
and a whole new system of dollars springing up outside the U.S., and then came the 70s oil embargoes.
Yeah,
How did that shake things up?
that's where the petrodollar system comes in.
Okay.
After the oil crisis, Saudi Arabia and other oil-producing nations struck a deal. They would only sell oil in U.S. dollars.
So if you wanted oil, you needed dollars.
Right.
I could see how that would further strengthen the dollar's position.
Absolutely. This move forced countries all over the world to hold U.S. dollars to buy oil.
Right.
And that fueled demand for dollars and for U.S. Treasury bonds, essentially giving the U.S. a huge economic advantage.
Wow, it's amazing how a decision about oil can have such a ripple effect across the entire global financial system, right?
It really highlights how interconnected everything is.
Yeah.
And it also shows how economic decisions can create winners and losers on a global scale.
Okay, so we've got this powerful dollar fueled by oil and the legacy of Bretton Woods.
Right.
But it sounds like there have been some bumps along the way, too. What kind of instability are we talking about?
Well, throughout this period, the U.S. economy has experienced these recurring cycles of boom and bust.
Right, like times when things seem great and then suddenly the bottom falls out.
Exactly. And what's interesting is that these cycles often seem to be tied to U.S. economic policy,
Okay.
specifically actions by the Federal Reserve. They've been raising and lowering interest rates to try to control inflation.
Right.
But this can create unintended consequences, especially in emerging markets.
What do you mean?
Well, think about it this way.
Oh.
When the Fed raises interest rates to combat inflation in the U.S., it can make it much harder for countries in, say, Latin America or Asia to repay their debts.
Okay.
We saw this play out in the Latin American debt crisis of the 1980s and the Asian financial crisis of the late 1990s.
Right.
And these weren't just abstract economic events. Real people lost their livelihoods. Entire economies were destabilized.
It's a really important point.
Yeah.
It shows how decisions made in Washington can have a huge impact on people all over the world, even if they have nothing to do with those decisions.
Absolutely. And it brings us to another turning point, the 2008 financial crisis.
Right.
And this is where we see a whole new tool introduced to the financial world. Quantitative easing, or QE.
QE, another one of those terms that makes my head spin.
I know it can seem complicated,
Yeah.
but it's actually simpler than it sounds. After 2008, the U.S. was facing a potential economic meltdown.
Uh-huh.
So to prevent this, the Federal Reserve basically started printing trillions of dollars
Wow.
and using that money to buy bonds.
Okay.
This injected a massive amount of liquidity into the system.
So they flooded the market with money to try to stabilize things.
Exactly.
Sounds risky.
It was, and it had some significant long-term effects.
Okay.
On the one hand, it helped prevent a complete economic collapse.
Okay.
It kept interest rates low, which made it easier for people and businesses to borrow money.
Right.
But it also inflated asset prices. Think about the housing market, the stock market.
Right.
All of that went up, but it also created a breeding ground for the high inflation we're seeing today.
So the actions taken back then, trying to save the economy, might actually be contributing to the rising crisis you're seeing at the grocery store today.
Right.
That's quite a twist.
It is. And to make things even more complicated, you've got the rise of China as a global economic power.
Right.
You've got growing geopolitical tensions around the world.
Yeah.
All of this has led to a lot of talk about de-dollarization.
Okay, so we're starting to see cracks in the dollar's dominance.
Yeah.
But what does that even mean? Could the Chinese yuan become the new king?
That's the million-dollar question. While China is a major economic force, their currency, the yuan, doesn't have the same level of international trust and acceptance as the dollar.
Okay.
For example, it's not as easy to move large amounts of yuan in and out of different countries.
So it's not just about the size of the economy, it's about trust and ease of use.
Right, and that's where things get really interesting.
Okay.
If not the yuan, what could replace the dollar? Will we see a basket of currencies emerge as the new global standard? Or could it be something completely new?
That's what we'll be exploring in the next part of our deep dive. Buckle up, things are about to get even more fascinating. Welcome back, everyone. In the last part of our deep dive, we talked about how the dollar rose to power and some of the challenges that it's facing now.
Right.
It seems like things are about to get even more unpredictable with this idea of a great monetary reset.
Exactly. The current system is definitely showing signs of strain, and there are some pretty bold ideas out there for how to fix it.
Okay, so let's dive into some of those ideas.
Bye.
We were just starting to talk about the possibility of de-dollarization, and our source material brought up this intriguing figure, Stephen Mirren.
Yes. Stephen Mirren, he's an economist who served as an advisor to former President Trump, and he's put forward some pretty radical proposals aimed at shaking up the global financial system and bolstering the U.S. economy, even if it means potentially devaluing the dollar.
Wait, devalue the dollar on purpose? Why would anyone want to weaken their own currency?
Well, think about it this way. A weaker dollar makes American products cheaper for buyers in other countries.
Okay.
And this could give a big boost to U.S. manufacturing and potentially bring back jobs that have been lost to overseas competition.
So it's like trying to level the playing field by making American goods more attractive on the global market.
Right.
But wouldn't that also mean that Americans would have to pay more for imported goods? Wouldn't that hurt consumers?
That's the trade-off, and it's a point of heated debate.
Yeah.
Some economists argue that the benefits of a manufacturing resurgence would outweigh the costs of higher import prices.
Okay.
Others worry that it could lead to inflation and harm American consumers in the long run.
It sounds like a pretty risky strategy.
Yeah.
What else does Mirren propose?
He's got a whole arsenal of ideas.
Yeah.
One of his most controversial proposals is using tariffs as leverage to force other countries into a new agreement,
Okay.
which he calls the Mar-a-Lago Accord. And this accord would aim to devalue the dollar and create a more favorable trading environment for the U.S.
It's a bold plan, but wouldn't that just trigger a trade war?
Yeah.
Other countries aren't just going to roll over and accept these demands, are they?
That's the big question, and it's a real concern.
Yeah.
Mirren argues that the U.S. needs to be willing to play hardball to protect its economic interests.
Oh, okay.
But this could easily backfire and lead to retaliation from other countries.
Yeah.
I mean, we've already seen glimpses of this in recent trade disputes, and a full-blown trade war would be devastating for everyone involved.
So a trade war would be like cutting off your nose to spite your face. Nobody wins.
Exactly. It would disrupt global supply chains,
Right.
raise prices for consumers, and ultimately harm the global economy as a whole.
Okay, so maybe tariffs and trade wars aren't the best solution.
Yeah.
What about this usage charge on U.S. Treasury holdings that Marin mentions?
Ah, yes. That's another one of his more radical ideas.
So,
Basically, he's suggesting that countries holding large amounts of U.S. debt, think China, Japan, etc. Right.
would have to pay a fee for the privilege of holding those assets.
Hold on. So he wants to charge other countries for lending the U.S. money.
That's essentially the idea.
Wow.
It's a pretty unorthodox approach, and it would likely face strong opposition from countries like China,
Yep.
which hold a significant amount of U.S. Treasury bonds.
Right.
They see these bonds as a safe and stable investment,
Mm-hmm.
and a usage charge would make them less attractive.
I can imagine that wouldn't go over well.
Right.
It seems like there are a lot of potential downsides to these proposals.
Yeah.
Are there any other less drastic alternatives to a dollar-dominated system?
There are, and we're already seeing some of them emerge. One trend is the rise of bilateral trade agreements that use currencies other than the U.S. dollar.
You mean countries are striking deals and saying, let's trade in euros or yuan instead of dollars?
Exactly. We're seeing this happen more and more, especially between countries that want to reduce their reliance on the U.S. and the dollar.
For example, China and Russia have been increasingly using their own currencies for bilateral trade.
Mm-hmm.
We're also seeing similar arrangements between countries like Brazil and India.
So there's a growing appetite for alternatives to the dollar, driven by both economic and geopolitical considerations.
There is. And
Yeah.
this trend is fueled by several factors, including growing distrust of the U.S. financial system, particularly after events like the 2008 crisis and the recent talk of a potential reset,
Right.
concerns about the weaponization of the dollar through sanctions, as we've seen with Russia,
Yeah.
a desire for greater financial autonomy and control over their own currencies.
It sounds like the dollar is losing its grip on the global financial system. Is this the beginning of the end for its dominance?
It's too early to say for sure, but the cracks are definitely starting to show. The dollar is still the dominant reserve currency, but its share of global reserves has been steadily declining for several years.
Okay, so if the dollar's dominance is waning, what does that mean for the average person? How will these changes affect our daily lives?
That's the million-dollar question. A multipolar currency system, one where power is distributed across multiple currencies rather than concentrated in the dollar, could lead to greater instability and volatility in exchange rates.
Yep.
This could affect the prices of imported goods, making things like electronics, clothing, even food more expensive.
Right.
It could also make international travel and investment more complicated and potentially riskier.
So things could get a bit bumpy as we navigate this transition.
There's certainly a possibility of that,
Yeah.
but there could also be some positive outcomes.
Okay.
A more diversified global financial system could reduce reliance on any single currency,
Right.
potentially making the global economy more resilient to shocks and crises. It could also create opportunities for new financial innovations and technologies.
So there's a mix of potential risks and rewards.
Right.
But it seems like technology will play a major role in shaping this new financial landscape.
Uh-huh.
We've talked about CBDCs before, those digital currencies issued by central banks.
Right.
Could they be the key to navigating this transition?
CBDCs are definitely a wild card in all of this. They represent a potential paradigm shift in the way we think about money and how it works. Remember, these are essentially digital versions of a country's fiat currency issued and backed by the central bank.
So it's like having digital cash, but instead of being issued by a commercial bank, it's issued by the government.
Exactly. And this brings both potential benefits and risks.
Okay.
Proponents argue that CBDCs could offer greater financial inclusion, lower transaction costs,
Okay.
and increased transparency.
Okay.
I imagine being able to send money to someone in another country instantly, securely, and for a fraction of the cost of traditional remittance services.
That does sound pretty amazing. What's not to love about faster, cheaper transactions?
Right.
But what about the risks? We talked earlier about privacy concerns. Could you elaborate on that a bit more?
Right. Privacy is a major concern with CBDCs since they are centralized and controlled by the central bank. There are worries that governments could use them to monitor citizens' spending habits and even potentially restrict access to their funds for political reasons.
Yeah.
Imagine a scenario where the government could block you from buying certain goods or services because they disagree with your political views or social behavior.
Well, that sounds pretty dystopian.
It's definitely a valid concern, and it's something that policymakers need to address carefully as they explore the development and implementation of CBDCs.
Yeah.
Transparency, accountability, and clear legal frameworks will be crucial to ensuring public trust in these new forms of digital currency.
So it's a delicate balancing act,
It is.
finding that sweet spot between innovation and protecting individual liberties.
And that's why this conversation is so important.
Right.
We need to be aware of the potential benefits and risks of CBDCs so that we can make informed decisions about the future of our financial system.
We've covered a lot of ground in this episode, from the historical context of the dollar's dominance to the potential for a new global financial order shaped by de-dollarization. Alternative currencies and emerging technologies like CBDCs,
Yeah.
it's a lot to take in. What are some key takeaways you'd like our listeners to remember?
I think the most important takeaway is that the global financial system is at a crossroads.
Okay.
The dominance of the U.S. dollar is being challenged, new technologies are emerging, and geopolitical tensions are rising. These factors are creating a dynamic and unpredictable environment, but also one full of possibilities.
Possibilities for both good and bad, it seems.
Exactly. And that's why it's more important than ever to stay informed and engaged. The decisions we make today will shape the financial landscape of tomorrow.
Okay, so what's next? Where do we go from here?
Well, that's where things get really interesting. In the final part of our deep dive, we need to consider not only the potential outcomes of these trends, but also the underlying values and ideologies that are shaping the debate.
You mean like whether we want a more centralized or decentralized financial system?
Exactly.
And what role technology should play?
Precisely. These are fundamental questions that we need to grapple with as we navigate the future of money, and that's exactly what we'll be exploring in part 3 of our deep dive.
Welcome back, deep divers, for the final part of our exploration into the Great Monetary Reset. It's been quite a journey, hasn't it? I mean, we've gone from the origins of the dollar's dominance to talk of its potential downfall. We've explored everything from shadowy eurodollars to the possibility of government-issued digital currencies.
Yeah, it's been a whirlwind tour of the global financial system for sure.
Yeah.
And, as we've seen, things are in a state of flux. There's a lot of uncertainty out there, a lot of big questions looming on the horizon.
Exactly. And I think our listeners are probably wondering, okay, so what does this all mean? What kind of future are we actually looking at here?
Well, that's where things get really interesting, and this is where we need to go beyond just looking at the technical aspects of finance.
Okay.
We need to think about the values and the ideologies that are shaping this whole debate about the future of money.
Okay, I'm intrigued. What kind of values are we talking about?
Well, for starters, think about centralization versus decentralization.
Okay. Yeah.
Do we want a system where just a few powerful players, like governments and central banks, call all the shots? Or do we want a more distributed system where individuals have more control over their own finances?
So it's about who holds the power, who gets to make the rules?
Yeah,
That's a pretty fundamental question.
it is. And there are strong arguments on both sides.
Okay.
Centralization can offer stability and efficiency. It can make it easier to regulate the financial system and prevent things like fraud and money laundering.
I can see that, but too much centralization could also be a problem, right?
Absolutely. Too much centralization can lead to censorship, control, and a lack of innovation.
Yeah.
I mean, think about it. If one entity has all the power, they can easily shut down anyone who challenges the status quo.
Right. So it's like anything else. Balance is key. Too much power in one place is rarely a good thing.
Exactly.
But how does decentralization play into all of this?
That's where things get really exciting. Decentralization has the potential to empower individuals in really unprecedented ways.
Okay.
It could give people more control over their own money, free from the whims of governments and central banks.
Okay, I'm starting to see how this ties back to some of the things we discussed earlier, like the appeal of gold and cryptocurrencies.
Yeah,
People are looking for ways to protect their wealth and their freedom from interference.
exactly. And technology is playing a huge role in this shift towards decentralization.
Okay.
Think about blockchain, the technology behind Bitcoin and other cryptocurrencies.
Right.
It's a distributed ledger that allows for secure and transparent transactions without the need for a central authority.
So are you saying that crypto could be the key to building this new decentralized financial system?
It's certainly a possibility. Cryptocurrencies offer a glimpse into a future where money is borderless, permissionless, and resistant to censorship.
Oh.
It's like the internet of money.
That's a powerful image. But as we've discussed, crypto also has its challenges, right?
Oh, it does. Volatility is a big one.
Yeah.
The prices of cryptocurrencies can fluctuate wildly, which makes them risky for everyday use.
Yeah.
There are also scalability issues. How do you process millions of transactions quickly and efficiently on a decentralized network?
Right.
And then there's the regulatory landscape, which is still very much in flux.
Mm-hmm.
Governments are grappling with how to regulate this new technology without stifling innovation.
It sounds like there's still a lot to figure out, but even if crypto isn't the ultimate answer, it feels like it's pointing the way toward a future where individuals have more control over their financial lives.
I think that's a key takeaway from all of this,
Yeah.
whether it's through crypto alternative currencies or other innovations we haven't even thought of yet.
Right?
People are demanding more financial freedom, they want alternatives to the existing system, and they're willing to explore new possibilities.
So what does this all mean for our listener, the person who's been with us on this deep dive into the Great Monetary Reset? What should they be thinking about? What should they be doing?
Well, first and foremost, I think it's important to stay informed. Pay attention to the trends we've discussed.
Yeah.
The shifts in global power, the rise of new technologies, the debates about centralization and decentralization.
Don't just bury your head in the sand and hope it all goes away.
Exactly. Knowledge is power, especially when it comes to navigating a changing financial landscape.
So stay informed, keep learning.
Yeah.
What else?
Be open to new possibilities. Don't dismiss ideas just because they're different or challenging. The world is changing rapidly, and the future of money is still being written. Be a part of that conversation.
Yeah.
Explore new technologies, experiment with alternative currencies, and challenge the assumptions of the existing system.
Don't be afraid to ask questions and think critically.
Precisely. This isn't just about numbers and charts. It's about the kind of world we want to live in.
Right.
Do we want a world where financial power is concentrated in the hands of a few? Or do we want a world where individuals have more control over their own destinies?
It's a powerful question, and it's one that each of us needs to answer for ourselves.
And as we conclude this deep dive, I want to leave our listener with one final thought.
Yes.
The future is not predetermined. It's something we create together through our choices, our actions, and our willingness to imagine a different world.
Beautifully said. Thank you for guiding us through this fascinating and thought-provoking exploration.
Oh, it's my pleasure.
And to our listener, thank you for joining us on this deep dive. Keep exploring, keep questioning, and keep those minds engaged.